All right, so here we go. How to find a mobile home park to buy. The most important thing about finding deals in any asset class, but particularly in mobile home parks, is increasing the volume, right? Increasing the surface area of opportunities, of number of deals that you get to see, because then you can throw away a lot of the bad ones, right? The more deals that you see, the more opportunities you have to find a great one. And so there's three frameworks here for finding better deals, for increasing your deal flow. Number one, obviously we just talked about. Number two, off market. That means it's not on loopnet.com. It's not on a publicly listed website. It's not on the MLS. It is a little hidden. It happens. The deals happen at coffee shops. They happen through phone networks from these brokers that specialize in the space. They have their known buyers that they always go out to. They don't like putting deals on the market on LoopNet because they get bombarded with looky-loos, with rookies, with people that are going to ask them a lot of questions and waste some of their time, versus if they just pick up the phone and say, hey, look, I have a 100-pad park in the market you like. I've sold you 5 parks before. I know that you close. That's a much more efficient way for somebody to sell a deal, for a broker to sell a deal. And 3, of course, is motivated sellers. The more deals you see, the more unique opportunities, unique situations you're going to come across. And that might lead to better terms like owner financing, where they're carrying the note. You don't have to go to you don't have to go to a regional bank. You don't have to even sign personally often. You don't have to go to a Wall Street CMBS lender, which is very complicated, and they want to see a big balance sheet. So anytime you get seller financing or a unique structure to the deal, it's going to increase your likelihood that you can actually close that deal without having to go out and get a giant loan on your own. All right, and so there's about 44,000 of these parks nationwide. Maybe only 10 to 15,000 are viable targets for the people watching this video today. A lot of them are too small, or maybe too remote, or too run down to be active acquisition targets for our needs, right? For great returns, for a good community, for a nice, safe investment. All right, next step. There's really 5 methods that you can use to find these mobile home parks. And we're going to start here with 1, the online marketplace. We talked about this in the last slide a little bit. It's LoopNet. It is the MLS. It's even Craigslist. CREXI is a newer version of LoopNet. They are an up-and-coming firm, a little more tech-forward. I like to use CREXI for when I want to look at deal flow. But of course, if you're looking online like everybody else that's looking for a mobile home park, it's going to be not as easy to find a great one, right? The more you do the easy activities, the less likely you are to come across a lot of great deals. But there are times and there are markets and specific strategies within mobile home park investing where you can go buy something that's listed publicly. Maybe you are an amazing operator in a particular market and you know that you can pay market pricing because you're going to be able to bring in some homes to infill occupancy or to infill vacancy. You're going to be able to be at that property more than somebody else. And so you're willing to pay market because you just know that you can drive the returns higher. So it's not to say that you can't buy something from LoopNet or an online listing. It just means there's going to be more people looking at it. There's going to be fewer great deals because sometimes the best deals, like I said, go via a pocket listing or direct to existing owners that are much bigger than you might be when you're first starting out. And also, if the timing of the real estate cycle fits, right? Maybe you have people are just panicked. Maybe you have a credit crisis. Maybe people feel like they can't raise enough money or they can't find the debt, so they stop looking. That's actually a pretty good time to do some of the easier strategies that we're going to cover today because there's just less competition. So when you're buying things at really high discounts relative to historical pricing, oftentimes it's fine to just buy something that's listed because you're buying at the right part of the cycle. And if you're getting in early, and then you can ride the growth, the rent growth, and perhaps the cap rate compression, right? The cap rate that goes down, value goes up. And so every once in a while, it's a good time to be buying at a particular point in the cycle, and you can just go online and shop like you're shopping on Amazon. Same goes for MH Village and Mobile Home Park Store. These are two obviously more focused resources online. And then you have the Facebook Marketplace and Craigslist. Oftentimes you're going to find very few opportunities on those resources, but every once in a while you can find something. So pro tips here, I would set up an email alert. I would set up notifications. You might be able to find something that's pretty small in your particular marketplace. It's just general advice. I would try to focus on a couple of regions first. Setting up nationwide searches is a very difficult endeavor. you are much more likely to win a deal, to find something that's good if you're focusing in your particular marketplace and hopefully in your backyard that you can go out and drive and canvas these parks. But if you are trying to go nationwide, it's a needle in a haystack. So I recommend when people are starting out that they at least focus regionally and ideally in one particular MSA. And a couple other tips here. Yeah, look for deals that have been listed for a while and then still haven't traded. Obviously, there's something going on there where the pricing, obviously, there's not a lot of people competing for that park, and you might be able to throw in a lowball offer that still works for the seller and get that deal done. Method 2, direct mail campaigns. Put together a campaign, send one flyer, and then watch the leads come in and buy 5 parks. This surprisingly still works. It's not a new strategy, but what you need to do is send these things 5, 7 times, if not more. Just develop a regular cadence of sending these out, because rarely is somebody going to get one of these flyers and go, oh yeah, let me call this person and sell my park at a fire sale price today, right? You have to be in front of this person at the right time. And you got to send a lot of these things, right? The typical response rate might be 1 to 2%. Going to need a lot of touches before they respond, or even it registers what you're asking of them. And then the cost, right? It's not inexpensive to do this. It's not crazy YouTube expensive, or it's not crazy Facebook ad expensive, but it is, pricey to put a physical flyer in the mail and do bulk postage. And I wouldn't recommend doing this yourself. I mean, it's cute to have the kids, licking stamps, and that might teach them some entrepreneurship lessons. But ideally, you want to be able to do this frequently, and I would hire one of the professional firms that will do this. It's amazing, how cheap they will stuff and print these envelopes for you. But once again, I would do this repeatedly. It's not a one-time deal. And you're not going to be the only one sending owners flyers, especially if you're focusing on larger parks. There's really 2 lanes here that I'm talking about today. There's people that are focused on more institutional quality, larger parks. Those might be 75, probably more like 100 pad and higher. And then I'm also talking about smaller parks. They might only be 25 pads. That's probably the majority of people that are watching this video are going to gravitate towards those parks. They're just a lot easier to find, a lot easier to make the underwriting and the math work, easier to get seller financing on. So filter some of this advice by which side you're going for. Large deals, very competitive. Direct mail campaigns are going to be difficult to pull off effectively unless you're doing it at a very large scale. If you're doing it at a small scale and you're focusing on just one MSA and you're going to hit those owners of 25 pad parks over and over again, you're going to get some calls. You're going to get people responding. And some unique tricks I like in this space is the people that will send out a magnet of that flyer. And so the magnet goes on the fridge in that seller's garage. And so maybe they threw 8 flyers in the trash, but your magnet is still sitting on that refrigerator once they decide that, that day is going to be the day they decide to sell their park. Because that's what you're really trying to do here. You're trying to get your timing to be fortunate. You're trying to you want to be like the last person in front of that seller. When they do decide something clicks, they get divorced, they have a tenant that one tenant's aggravating them, and they just say, you know what, enough, I want to get out of this thing. Or they just decide, this is the year they want to retire, and you happen to send them the last communication with an offer to buy. And then 3 subtle points here. Keep it simple. This doesn't need to be something polished and beautiful. The most effective ones I've seen in this space, one of the largest owners of mobile home parks now would send these postcards of him and his family. You can go that route. You can go, something that is like a yellow letter. That's a common route in single family housing direct mail campaigns, but it looks like a handwritten note. Those are going to be way more effective than some glossy thing that looks like it's from a private equity firm, because you're trying to reach mom and pop owners. They don't want to be sold to by a big Wall Street looking firm. Be consistent. We talked about this. You have to get a frequency of these things. It's not a one-time effort unless you just get very lucky. And then track everything. In addition to sending these out, well, you have to know who to send them to, and you have to know which properties to go after. And is that the right owner group? Is that the right address of their LLC? And that is managed by keeping a database. There are some services that you can use that will do this for you, but you can't just buy some cold list that you found online that's 5 years old and have any luck with that database. It's probably going to be old and stale. The firms that do this at scale, that really use direct mail campaigns have really proprietary databases that they are having their junior staff scrub these data points to making sure that all that information is up to speed, that you're reaching out to the right ownership group, the right LLC. It's that the property hasn't sold to another group. And so these things are fluid. The database is a living thing. It changes every month, right? So in order to have the most effective mail campaigns, you have to have the cleanest data, right? So those two things go together. Cold calling owners. We don't do this. I never thought this was particularly a good use of my time or the team's time. I do think that some people are effective at putting together cold calling campaigns. Some of them even have, at the very large institutional scale, will have like a boiler room of 3 to 5 salespeople that are cold calling owners to see if they can get somebody on the phone. That's obviously a big investment, and you don't jump right into that. But if you are a former broker, you're a current broker, and you're looking to buy one of these assets in your spare time, a side project, oftentimes that's how you built your business in brokerage. So this is how you're going to build your business in finding a park. And so it's not that it doesn't work. I just never thought it was going to be a great hit rate and a lot of pain to get to those few that do say yes. But it certainly can work. And then it gets even easier if you are focusing in one market as opposed to obviously trying nationwide. Here are just some random little tips about, how are you going to actually implement that call. You should have a loose script just to get through the opening intro. I mean, because you're calling to say, hey, I want to send you a lot of money. So it's not a horrible call. And you'll often find mom and pop owners, they do like to chat. I mean, I was not a cold caller, but when I would get in front of them, maybe it's in person. I did a fair amount of that. But when you do get in front of them, they like to chat. They want to talk about their asset. They're really proud of it, and so they're happy to talk about mobile home parks. It's just really hard getting over that initial hump of, hey, are you wasting my time? So here are just some metrics. 2 to 5%. I think that's high. That's an industry metric that we pulled, but I think it's probably sub 1%. But it's certainly an avenue you can pursue if you have a lot of hustle and less resources like money to invest in teams, software, and other systems. This is one route you can go. This is what I call the brute force route. And like the mailing process, you can also leverage some software tools out there. I'm super jealous that I didn't have some of these tools today that could have really boosted our efforts in finding off-market deals. There's software that will do a lot of the heavy lifting for you here in terms of treating these properties like a CRM, where you can find these off-market deals. You can enter your notes and do that by property. And in the background, the software is updating the addresses when transactions happen. They're looking for the LLC ownership to see if, hey, is that in the same state? Okay, it's an out-of-state LLC. It's probably a institutional owner. It denotes that data point, so you can query by those metrics, which might make it easier to find owner-occupied type of deals where the mom and pop owner actually lives at the property, right? Oftentimes, they're a great target for somebody that might want to sell soon. So once again, I'm envious of some of these tools that are out there today. Regarding questions to ask, look, I mean, this isn't rocket science. You just talk about their park, talk about, get their story, get them talking. That's what you want to do. And then you can start, throwing in little questions like, hey, what's the lot rent currently? And have you thought about your exit strategy? Like, what does retirement look like for you? This last point on would you consider seller financing? That's probably a third, fourth, fifth phone call type of question. I typically liked when we would get a deal off market and we're negotiating with the seller, I tended to throw that in towards the end as we've done the math, we've talked to some lenders, and we can actually increase the price a little bit if you're able to carry a note that looks like these terms. And you'll be surprised at how many owners, especially later in the process, they've kind of already mentally sold the park. Once you're talking about purchase contracts, terms, purchase price has been agreed to, they're kind of already thinking about, oh man, I don't have to manage this thing or deal with it anymore, and I'm going to get this big check. When you're giving them another solution later in the process and you explain to them that, hey, look, you can also defer your taxes, right? Not have to pay the taxes all up front, which means you won't have to do a 1031 exchange if that's what you were thinking, to defer the taxes even longer. Whereas seller financing gives you a way as the seller to, over time, pay the taxes, right? Each year you're paying a small amount of the taxes versus all of it upfront in long-term capital gains. So anyways, those are just some little tiny tips on what to talk to potential sellers about. Number 4, this was my favorite method. It's how we find the vast majority of the parks that are in our portfolio. It's networking and talking with brokers in trying to find these pocket listings. We talked about a pocket listing being something that's kind of happens off market. Technically, I would say it's on market in that the broker's involved and he's talking to more than just you, but he's not posting it online. He's not making this a known viable target for thousands of people. It's usually 2 to 5 groups that he's talking to, who he's worked with before, usually, and he just wants to make this as easy as possible. Because the other thing too is that think about it, the broker really has 2 shots at selling this thing, because he can recommend a particular seller that might have the highest purchase price offer. But what happens if it's 60 days later and that buyer backs out? Well, then he's got an angry seller. And so he's got one more bite of the apple. He doesn't want to go to a group that he's never worked with before. He wants to go to a group that he knows for sure, or at least is as confident as possible, that they are going to do what they said they are going to do on their term sheet. So he goes to somebody that he's worked with before, somebody that is local perhaps, or somebody that has expressed interest in that particular market before. And this is how you win your first deal, is you really get to know these brokers. You make them feel confident that you're going to close that deal. And you might be able to develop these relationships via email, via the phone. In person's always best. So this is going to industry conferences like MHI, often in Vegas. This is state manufactured housing shows. Oftentimes there's some sort of association in every state where local owners will get together. Surprising amount of deals get done that way, is especially if you're the youngest guy in the room and everybody is retired or 60 plus and has 1 or 2 parks. Like, they always want to help out the up and comers. You'd be surprised at how gracious this industry is. It's certainly a growth mindset, I found. REI meetups, those are events in larger cities that oftentimes multiple asset classes will get together and they'll talk about real estate deals. And hopefully there's some mobile home park owners in that meetup. The nice part about that is there's also going to be prospective investors for you. And that we'll talk about that in an up and coming video. But after you find the deal, you obviously have to find the capital to close it usually. And so real estate meetups and meeting people in person is often a way to kickstart that process, because once you have coffee, you break bread with people face to face, the trust level is exponentially higher in terms of somebody just talking to somebody faceless once on the phone. Online communities, Bigger Pockets, Facebook, there's a couple of niche mobile home park networks out there that can certainly help you break into the space, because once again, you become a known entity to the brokers. And so if they have a park that maybe most of their buyers think is too small, or they think is a little too hairy, but because it's in your backyard and because you want to hustle and you want to, make sure that first deal goes really well, you're willing to take a little bit more risk, or you're willing to go a little bit smaller on park size. You're the guy, you're the girl to buy that park. And it's a lot easier to be that person and get that phone call if you're a known entity and you're not some random email address that's reaching out to them for the first time. And then the brokers, I don't think this is particularly, I don't think this is super useful. I think everybody knows most of the nationwide brokers in this space. Just about every large brokerage has a division that focuses on manufactured housing today. That wasn't the case, when I started 12 years ago. So that wasn't the case back then. But now just about every major brokerage has a specialist or a division or a team that's focused on manufactured housing. And the last method 5, was one of my favorite, because usually if you're looking to buy more than one park, when you're flying out to the park that you have under contract, well, I wanted to make use of that time. And so I often like to drive around and look at all the other parks. That's good for not only due diligence on the investment that you're working on, because you need to see what the competitors are. You need to find their lot rents. You need to see what kind of amenities are included, what's the condition of the infrastructure. But you also have the opportunity now to talk to the property manager of that park and hopefully the owner. The owner might live on site. Oftentimes I would run into an owner randomly who was just kind of visiting his park and just kicking the tires, making sure that things were staying on track. It's surprisingly amount of mom and pops would still do the landscaping. So, don't just dismiss somebody who's on a lawnmower at a big, nice mobile home park and thinking that's just the landscaping guy. Sometimes that is Pop, who has owned the park for 30 years and is quite wealthy and just likes to take care of his asset. You'd be surprised. And so when you're driving these parks, which is the nice thing about mobile home parks versus just about any other real estate asset class, you don't have to schedule a tour, right? You got to be thoughtful about it. You can't, roll down your windows and scream, about, hey, I'm buying this park and this, or it's like you need to be thoughtful and not disturb any of the tenants. But you can just drive through a park. You don't need to schedule a tour. You don't need to talk to anybody. You drive through it, right? Because what are you buying? You're buying the infrastructure, you're buying the roads. It's an open community typically. Very few mobile home parks have gated entries. And so you can drive through it and you get a real sense of the infrastructure. Is there deferred maintenance? Is there vacancy potential here? Because you have the capital to bring in mobile homes, new ones to fill that vacancy, whereas perhaps the current owner does not, because they've owned it a long time and they've just been living off the cash flow. And they don't have a giant loan anymore, so they're not that motivated to work hard on infilling vacancy, whereas you have to drive the numbers. You're going to be a new owner, and so you might be more motivated. And then you can map out your itinerary. You want to be thoughtful about your time when you're out there. You don't want to just drive around willy-nilly. Of course, you want to do so in a productive manner so you can get back home to your kids if you're out of state. But you can then type that info into some of the software tools that we kind of mentioned before that will help you map out. We'll even give you possible numbers, and then you can call those numbers and say, hey, look, Mr. Seller, I'm outside of your park right now. Beautiful property, bravo, well done with this purchase and the maintenance of it. I would love to have an opportunity to buy it from you. It stands out versus somebody sending just a random text message, hey, sell me your park, which I always delete those, right? That's just some in-person tools. The knock-on-door approach, you'd be surprised. Once again, a lot of managers will talk to you. A lot of owners will chat with you, for hours. If you hit it off with them, you can take them to dinner. You can take them to lunch. I've done all these things. And you'd be surprised if you catch the timing right. They like you. Deals happen that way. All right, so that was the 5 methods. What we also want to think about, we can't just go out there and make a bunch of offers and hope good things are going to happen. You got to buy good deals, right? So we started with, how do you find a deal? Well, let's rewind a little bit and talk about, what actually makes up a good deal. So we're going to segment this into two lanes, right? Small deal and large deal. First, small might only be 25 lots. The problem with small deals is that they are harder. This is counterintuitive, but they're actually harder to run because you don't have enough revenue from this property to hire good on-site staff. You can't hire a good property manager. You can't hire good maintenance people. There's just not enough absolute dollars coming to you to make that P&L work. So you often have to figure out something. You either negotiate a deal with one of the residents where they just kind of help you collect the rent once a month and call you if there's a major problem. Or, you can just be the manager yourself. I would never do this, but if it's in your market and you're young and you have more hustle than money, you got to do things like this. So maybe you're the manager of that property and you're out there every week. There's not a lot going on day to day at a park, right? You own the infrastructure for the most part. They own the homes. So there's not daily things to do, but in the beginning, that first year or two on a turnaround park, there's often a ton of stuff to do when you're getting your operations and your systems in place. So a smaller deal, you got to get paid for all that extra hassle. You have to get paid for the higher risk that you're taking with a small deal. So your cap rate, your going in yield without debt factored in, is got to be 8% plus, ideally double digits for a small deal. And so you can see here, You can drive amazing returns with small deals. They're just a lot harder to run. They're a lot harder to get scale, but they are easier to find because there are not giant private equity firms. They're not groups like us that are day in and day out looking for new investments in this space and that are well capitalized. So this is often an entry point is via a small deal. And thankfully, if you pick the right deal and you do operations the right way with good systems, often can generate good returns. Those good returns can be leveraged as a track record into doing bigger and bigger deals because you made your investors money. You now have a real experience to lean on, which certainly helps with subsequent deals. It also helps when you're sharing that message with brokers. You've closed some deals, so you actually are a known entity. You're not somebody who's hoping to get in the space. You actually are a mobile home park investor. The price per lot, this is not an absolute. Of course, this is a function of lot rent. But the most common range is 20, 40K for a smaller park today. Sometimes you'll dip into 50, 60 if it's a really good market. But small deals, once again, you got to get higher returns. And so you rarely ever would be buying a small deal at 100K a pad, unless it is just in an unreal location, like maybe Orange County, California. All right, so some of the infrastructure things here, you want to focus on city utilities if possible, right? That's public utilities. You want to talk about, having less infrastructure risk, less CapEx risk. So roads ideally are paved. There's plenty of good deals that have dirt roads where you come in and pave them. If you have the capital, that's a very good strategy. But ideally, your first one, you might want to simplify with paved roads. Good location, right? Number one principle in real estate. You can stretch the amount of locations that you can go to because the thesis in this space is so compelling. Relatively fixed supply, giant demand for affordable housing. So you don't have to be in a amazing core location like Phoenix, like Orange County, like New York, right? You're not going to get unreal locations for a lot of these parks. You actually have to stretch your buy box, which works with mobile home parks because most of these tenants don't want to be in a dense location. They kind of want to be on the edge of the town. They want more space. That's why they are choosing this. That's one of the reasons why they're choosing this type of housing is they want more space. They don't want to be in an apartment with people on top and on both sides. They want their own driveway. They want their own yard. And so a good location means something different. And we'll talk about that in other videos as well and go more granular. Financials, ideally you want a deal, right? Ideally you want to be able to do the easiest thing possible from a value add standpoint and hand out a rent increase notice, a reasonable one. I don't like the groups that will come in and raise, double people's rents the first year. I don't think that's sustainable. I don't think that's the right thing to do. And thankfully, the vast majority of groups in this space do not do that. They raise rents sustainably, which is the attractive feature of this space, is the ability to raise rents methodically over time without having to worry about giant crashes in occupancy. I don't think there's any other real estate asset class that you can say that. High occupancy, sure. The return potential, your underwriting, your Excel model on a 50% occupied park is going to look amazing if you make any kind of assumptions on infill, your ability to bring in some used homes or perhaps some financed new homes to increase occupancy from 50% to 100. Sure. But the model means something different than actually operating it. So operating on your first deal, that I think it's just asking for too much. You want to simplify things early and then start increasing the difficulty level as you get more professional in the space, as you add team members and capital and know-how. For your first one, there's going to be surprises no matter what you do. So I tend to recommend you limit the amount of variables that can go wrong. And certainly low occupancy is a tough variable to start with, unless you're getting this thing for a fire sale price. Lot rent only. This has to do with, do you own the homes or not? If it's a park-owned home type of property, which you see in the Southeast a lot, where the owners just decided that they were going to own all of the homes in order to get up, in order to increase total revenue, that's more difficult than owning a park that is 100% tenant-owned home, which is the traditional model in this space, where you just own the infrastructure, those lots, and then the tenant pays you lot rent. That is a much simpler business model. That is a much easier path to great returns. And once again, especially as your first deal, it's what I tend to recommend people pursue, but they're harder to buy because there's more people that want those types of parks, of course. So anyways, that's a small deal. Everything's pretty much the same for a large deal. except for the metrics are going to be tougher, right? A 5 to 7 cap is typically the range, more like 5, closer to 5 today than 7 in most strong markets. All right, one nuance point here is with the city utilities, obviously that's ideal. It's ideal for the smaller deals as well. But here you can start to, once you get more sophisticated, once you start working with larger properties, a septic system, especially where each home has its own septic or maybe 2 homes per, that's a very diversified system, especially if you have a lot of space. We will definitely go for deals that are high quality and good markets that happen to have a septic system. Well, and treatment plants, that combo is really rough. I probably would avoid those for your first deal for sure. I mean, 100% for your first deal, I would avoid that type of combo. But if everything else checks the box, something like septic or maybe just well only in public sewer, that can be more manageable for your first deal and something you might want to do because it's easier to find those properties because everybody's looking for city water, city sewer, especially newer people coming out of some sort of boot camp. They all want the city services because they just know that's going to be easier to run. And the valuations on larger deals, last point on this slide, wide range here depending on the market and the lot rent, of course, but we're seeing deals getting done at $100,000 today per pad that are still compelling, that still have market rent growth opportunities that can still generate a double-digit type of return with amazing depreciation benefits and still worthy of pursuing. And the $40,000 parks, sure, they're out there too. You're just maybe going a little bit outside. Maybe it's an hour outside of a larger MSA, or perhaps Pop just has not raised the lot rents in 10, 15 years. And so you're getting it at a lower basis than it certainly it costs to build. So to build one of these things is going to be $80,000 plus a pad, oftentimes well north of that, including your carrying cost to finance that development. That's one of the nice features about mobile home park investment. I don't think I've ever invested in a park where I wasn't investing at a large discount to the replacement cost, which is a good place to be investing. All right, red flags to avoid on your first deal, private utilities. Once again, you can make exceptions here, but this is just increasing the difficulty level. So you want to do this wisely and be thoughtful about it before you dive right in with private utilities. Declining market, this is the one I actually would avoid the most because it can work. A market does not have to be growing. It really just has to be stagnant. It really just has to be stable. It cannot be declining though, because then it's just a ticking time bomb. Eventually, people will not have incomes high enough to want to support your park further and pay their lot rent on time and maintain their homes and lots. Things will just degrade. It will be circling the drain. So avoid declining markets. Flood zone. Pretty self-explanatory. You don't want your park floating away. Park-owned homes. This is increasing the difficulty layer. This is mobile home park investing on hard mode when you have a park filled with homes that you own on your balance sheet, where you're having to have your staff or you personally fix things that are breaking in these homes. Because you think about a park that has a bunch of 1995 single wides, things are going to go wrong. That's an old home these days. So you want to ideally start with a park that has tenant-owned homes 100% because you can deal with the problems that pop up with that home. It's usually going to be a small water leak, potholes in the asphalt, in the roads. Those are manageable. But when a mom's washing machine breaks, when a dad's oven stops working and they don't own the home, they're going to be calling you a lot. And your property manager, if the park is large enough to support a property manager, they're going to be harassing them daily to fix it, understandably. So you probably don't want to work with a mobile home park as your first one that has these extra hoops to jump through. Age restricted, 55 plus. These are fine parks. I've invested in a fair amount of them, but I probably wouldn't start with one because you want to have your systems in place. These tenants aren't messing around. These tenants are keeping great care of their homes. They've lived there a long time. They're retired. They're on fixed incomes. You can't increase the rent too high. You have to really know what you're doing with the 55 plus senior park because it's just not for beginners. You're dealing with not professional tenants, right? They're good people, but they're there all the time. And so they see things that need to be fixed with an eagle eye. And they will tell you about it constantly. And so I would just try to focus on family homes. These are all age communities as your first one. Generally have higher returns, are easier to buy too. The 55 plus tend to be more institutional type of deals, larger, more valuable, harder to buy for your first one. Environmental issues is pretty self-explanatory. Don't mess around on your first one with a phase one that's failed. This is a phase one is your get out of jail free card if there happens to be some sort of underground storage tank that's been leaking toxic fluid. Highly unlikely, but it's nice to have a clean phase one to just remove that risk. And so don't mess around with environmental. This is the first due diligence item, third-party report that I always got purchased or had done first to make sure just, hey, we're checking that box. All right, so we've covered a lot here, but how do you move forward? What is your plan of action to actually make progress on buying your first park? Step one, you got to define, where am I looking? Like, what is the buy box? I would talk about utilities. I would talk about size, the amount of capital it's going to require. I would focus on what market I'm going after, what region, because we talked about this, but once you focus your efforts, it's much easier to move things forward and make progress as opposed to shotgunning the entire market on 100 different brokers. If you pick a couple brokers in one specific market and you know the 30 mobile home parks that fit your category in that 50-mile radius, you literally can drive and go try to talk to people at each one, and you can meet with each of those brokers that specialize in that market. You're going to get progress a lot faster than if you try to just go to MHI and the Vegas, nationwide show and talk to everybody and try to make progress that way. It's not going to happen real quick. It can happen, it's just not going to happen as fast. And then number two, set up these deal alerts that we talked about to make sure that you're hearing about deals in your market. Maybe you're not the one that's going to buy that deal, but you want to start seeing the transactions. You want to be in the flow of these deals so you can start seeing the numbers that are involved, start seeing the people that are making deals happen, the players in your market. This will just increase the looks that you have. And so you want to just, on the back of the envelope, underwrite these things. And we're going to get into underwriting in a separate video, but you want to just start getting an intuition for the math, figure out what you would have been willing to purchase that park at, compare that to where it actually traded. And so set up your deal alerts. And then start working on your owner list. This doesn't have to be the giant complicated database that some of the best in this business are doing and building and working on each day. It certainly will give you an edge to create your own database, but this could just be a simple Excel spreadsheet, a Google sheet where you're tracking the targets, the parks that you want, and the owner name, phone number, emails. Simple as that. Some loose metrics about lot rent, where they're at, what's included. That's a big step in the right direction. Or you can get more professional. You can put that into a CRM as well, and you can reach out to these owners. You can implement, we didn't even talk about this, but you can implement AI software to start frequently emailing and texting those owners from your database. Once again, I'm very jealous of some of the tools here. AI is going to, at least for the next, 2 to 5 years, is going to be a weapon to go find more off-market deals. And so this is, at some point, people are just going to stop responding and stop looking at their phone, right? With these random cold call AI text messages. But for now, it still works. And so I would lean into that. And I would lean into the software that we talked about that can do a lot of this heavy lifting for you before you have any assistance or before you try to hire a bunch of offshore VAs. Number 4, take consistent action. This is critical. Consistency is what wins in this space. You got to reach out to these people often. You're not going to just spend 2 hours one day and magically come across the deal of the century. I'm sure it has happened. It's probably not going to happen for you. So you have to do this methodically. This has to be something that you really want. And so I would put in the systems and really just focus on the process, because if you do those things weekly, daily, monthly, year in, year out, you'll be surprised what actually pops up in your lead box. All right, that was it. That was my overview on how to find your first mobile home park. There's probably 3 more hours we can spend talking about this stuff, but I think that was a really good first intro that lets you go deeper than what you might read in a blog post, and certainly can get you 80% of the way there. Just with that info, you can get 80% started with starting to reach out and make progress on this goal that you might have to buy your first mobile home park. All right, with that, thanks for watching. If you want to learn more about mobile home park investing, you can check out vintage-funds.com. We have a ton of resources there in addition to what you've just learned today. Feel free to reach out if you have any questions, and we have more videos lined up in this playlist, so go ahead and enjoy the next one. Thank you. And make sure you watch video number 2, how to analyze and underwrite a mobile home park investment. This was the first video, how to find your first mobile home park. We have a second one coming up on how to underwrite and analyze your first mobile home park investment. All right, thanks for watching.